Matt, what's your word of the day?
So my word of the day is dispersion. As you pointed out, we've got a really big week for earnings, and it's only going to pick up from here. And I think the trend that we've seen over the past couple of earnings season, where the rising tide isn't lifting all boats, I think that's going to continue to play out this week. I'm certainly optimistic on where this market goes. I see no reason why we can't get past 6,000 or beyond on the S&P 500 heading into year end. But I don't think the path to get there is going to be linear. And I think some companies are going to continue to outperform with respect to their guidance, the EPS numbers, and some won't. And so that dispersion we're going to see sets up a really good opportunity for investors who are selective to be successful in this market
All
going
right, so
forward.
we're talking about a dispersion for earnings season. I want to talk to you about the estimates for Q3, 5% earnings year over year. It pops up to about 12% in Q4. What do you make of this? We had a guest on earlier that believed that this estimate is just a bit low.
Yeah, Frank, I agree. And I wrote a note to our clients this week saying the same thing. I think the bar is quite low. And I actually would expect we're going to see 7% plus EPS growth for this quarter, with expectations rising into the next quarter for 2025. We're getting back to that double-digit earnings growth we want. I think the numbers in particular for energy look very, very low. I think we're a little bit too pessimistic there. And I've also been encouraging our clients to lean into cyclicality. So leaning into some of those financials, those industrials, companies that are more fundamentally tied to the solid economic backdrop that we have, but where you've seen them underperform relative to defensives. And I think that'll play out with respect to earnings too. So beating that 4 or 5% hurdle should be pretty easy. And there's lots of opportunities for investors to still get into certain parts of this market at good valuations.
As we're talking about those cyclical names, I think we also have to talk about materials and industrials. I want to ask you, with some of the news we had over the weekend regarding Chinese stimulus, not fully clear on the details, but there's a clear understanding that there is going to be some stimulus. In your mind, does that change some of your view when it comes to industrials, materials, when we're talking about cyclicals, the idea that they may get an additional boost from China?
Yeah, it does. And I'd like to separate my views on China relative to some of those sectors, because while I'm still skeptical on what China might actually deliver, what I am excited about is essentially the stimulus puts a floor on how low we think their economic growth is actually going to fall. And I think that can breathe fresh life into some of these more global cyclical companies, like the big diversified miners, some of the industrial companies, both in the US and Europe, that might have more of their revenues being derived from China. But I also encourage investors to ride that wave of optimism around even some of the more domestically focused parts of industrials, like aerospace and defense, electrical equipment company, names where we're seeing really good free cash flow, where we're seeing earnings reaccelerate higher. I think that can ride that optimism, but I like the fact that there's still more domestically tied with respect to the fundamentals for their business.
Speaking of optimism, your pick for us is the small caps, the Russell 2000. We're going to show the year-to-date chart lagging the broader market. There's also some seasonality coming up. BTIG out with a note that the Russell's up just over 2.5% in November over the last 2 years on average. What's your case for the small caps? A lot of people have come on. We just haven't seen the rally that a lot of people have thought we would see.
Yeah, Frank, I sense that frustration when I talk to clients as well, because I think everyone was really excited about the potential for small caps when we started to get the first rate cut, and that just really hasn't played out to date. But what I would encourage investors is that at the end of the day, it all comes back to fundamentals. So as we move into earnings season and small cap earnings tend to pick up a little bit later in earnings season, pay attention to what's happening with respect to earnings estimate revisions. Small caps have underperformed for the past few years for a reason. They haven't delivered earnings growth. They haven't delivered the top line growth that we would expect.
Okay.
But I would expect the free cash flow to be better, earnings to accelerate. Right. So own small caps and play the long game.
Matt Orton,